All right, well then let's officially kick things off. Thank you for everybody for joining us for the second episode in our Leveling Up Your Trading series. My name is Charlie Bathgate. I'm the CEO of SangLucci.com and WallStreetJesus.com, and I'm joined by our esteemed guest Chris Cady today.
Hi everybody. I'm Chris Cady. I'm a friend of Charlie's and a trader by
Yes,
trade.
and he's also one of the lead educators in the master course, which we are very grateful to have him now. Playing an increasingly large part in that educational experience that we have, which we'll talk about more later. But today we're here to talk about leveling up your trading. That means breaking through most often psychological barriers, the things that are holding you back from basically actualizing your potential as a trader. This webinar series came out of something that Lucci said in a P&L review not long ago, where he said, it's really time for me to step up, to level up as a trader, to go to actualize my potential and to move past the things that are holding me back, which to some people, Lucci put up $1 million month in September. They're like, what, what are you talking about? How many more levels are there? But everybody's got another level. Everybody knows that there's something next for them on the path. And the process of moving forward on that path is just identifying, okay, what is it that's holding me back, and moving through that. So this whole series is just a series of conversations between myself and the best traders that we know, all of whom actually right now are teaching in the master course. We did one with Ranchero on Monday. We're doing one with Chris Cady today, and we'll have another 3 to come after this. And Chris, before we dive deep into this stuff, can you give everybody just a quick 1 to 2 minute background on yourself, trading and otherwise, that could be relevant to this?
I guess people think that you're a success if you survive in this game. So, right, I've been here now 40 years. I got my membership when I was 20 years old. I've been a member of the option side of the New York Stock Exchange, the CME, the New York Board of Trade, COMEX. And now with all the floors closed, we're literally across the street with a bunch of big traders. We share our workspace at Regis, which you can see behind me. I've had, my teachers have been Walter Frank. He was the chairman of New York Stock Exchange, followed by Victor Sperandio in Market Wizards. And then Peter Stottlemyre, starting in 1991, the founder of Market Profile. All those people are instrumental, and you can see a lot of the process that the auction market theory, the structure stuff that we'll be talking about comes from all those people. And of course, the game has changed. So now the challenge is to apply some of the old rules with now things like artificial intelligence and the ability to understand auction market theory. So, with that, we'll just try and help and see if some of the things we can do will help navigate this incredibly volatile and punishing environment if you're not right.
Yeah.
So it's it's not a place to treat with any sort of lackadaisical or it's like you better, it's game on here now. And so, and as Lucci's saying, right, he's trying to level up, and the idea is time's going by. Right. And so the idea is that you can't get the time back. And so you want to be as good as you can be, because if you compound your returns every day, your returns build over time. So the fact that you're not performing at your best over time will cost you significantly as time goes by. So the ball's in your court there. You really have to make the effort, and you have to develop critical thinking skills. You have to develop the ability to execute. You have to build you want to make sure that you're policing yourself so that you don't engage in things that are magical thinking or hopeful that lead to trauma. Again, it's the slow, steady cash flow over a long time. We're not looking to have huge volatile results. We're looking to make you guys function in many different environments, right? So with that being said, let's move forward.
Yeah. And Chris also has a deep background in meditation and has a very developed meditation practice. So he and I nerd out on that a good bit. So we may start throwing in some language that kind of comes from that experience here every once in a while. If you guys have questions about anything that we're talking about throughout, just throw it into the Q&A section of the webinar of the Zoom chat, and we'll get them answered towards the end of the chat.
Right,
Chris,
the understanding of having a solid understanding of who you are really helps when you're taking heat in a trade. The idea is people who just roll the dice, whether it's emotionally or trading, just have no staying power. So the practice of becoming knowledgeable about your own abilities or your own limitations at least gives you something to lean on when things are wild now.
well, that's a perfect place to start. I mean, when we were doing some prep for this, I was asking you about, okay, are there times in your career when you think about something that was holding you back, and that you really had to push through, and you said, yeah, fighting with my mother. Like, can you unpack how that played out for you, and fighting with your mom, and what relevance that has to do with trading?
In my case, my mom was the person who was in charge of the guest lists for the state dinners at the White House under the Eisenhower administration. And I grew up in Westport, Connecticut, where the situation in the school was in the 70s. The Doors played at my high school.
That's awesome.
So I had an interesting blend of having to write thank you letters and go to dancing school in Southport and things like that. And then all of a sudden following the Grateful Dead around.
Yes.
So my mom and I didn't see eye to eye on the cultural shift that was occurring there in the early 70s. And so a lot of that led to me being self-reliant and going my own way rather than knuckling under to her wishes. And now, of course, we're great friends now, but at the time it led to the idea of when I started trading at a young age, I would fight with authority. I'd fight the moves a lot. And so and then if you fight with your girlfriend and then you come back to work and you're like, oh, I'm right. You gotta be like, oh, back up, because it is not your girlfriend. It is not your mother. Just back it up, right? And so you have, the point is emotional regulation. Make sure that you're separating what's happening in your relationship, because the skills there are different than the skills you need to trade correctly. Right?
So you're saying that you had just sort of an anti-authority mentality in part because of relationship with your mom, and then you were bringing that into the market in the early days of your trading career.
And it was celebrated on the floor. Everybody was anti-authority.
Yeah, all traders are anti-authority. It's an inherently.
Right? It's just we're all misfits. So
right.
And so the idea was that you have to have a contrarian streak strong enough to be able to hit the mouse and say, I think.
Yeah.
So it's actually, that's not the hard part. The hard part is after that is being able to admit you're wrong as soon as you go, I think. Right. And that's a transition that a lot of people fail in trading, is because they can't get out of, they have no problem saying, I think, but then they can't say, oh, wait a minute, maybe I'm wrong, and let's just rethink this. Right. That was a great thing about the floor. People would say to you, maybe you should rethink that. And that allowed you to unwind that confirmation bias or that decision that you had invested, right? So many people are so invested in what they think that they don't even recognize the real skill is unwinding that as fast as possible.
Yeah. Yeah. Was there a particular moment for you? Was there a day, a loss where there was like a wake up call for you where you were like, I got to stop bringing this mentality?
More like you could watch the better traders really get heavily invested in a position and then immediately flip out of it as soon as they were wrong and take a loss. They would just take a loss before everybody else. And as though it was like an intellectual or behavioral gymnastics that was really interesting to learn from. And that I think we may be missing that if we don't have these communities like you're trying to build now, where you can get people to say, look, I'm taking a loss and it's not damaging my self-esteem. It's just part of the business.
Right.
So you need to be emotionally and mentally gymnastics qualified, for lack of a better word, to just be like, hey, look, I'm out, I'm done. And I'm going to, that frees me up to take another shot. And so the freedom of the mental agility and the discipline to execute and getting out of losers is really freeing. It's like you become a purified individual by being able to just move in and out quickly, rather than stratified individual with a like a concrete opinion about something. The first rule in meditation, right, is things change.
Right. So is that it was it like how did you learn to let go of those biases? Like how did you let go to have that mental, how did you have that mental flexibility? How did you get to that point? What did you do?
It's first it's a lot of monkey see monkey do. You watch people who are good and you're like, okay, they still seem to be normal, healthy people, and they have the ability to move from idea to idea very quickly, and they're not flaky, right? They're acting and they're responsible and they're prudent. Then so that that was like, those are character traits. Given that cause and effect is a valid function, these are character traits that I want to assume. Mm-hmm. Right. And hopefully through these classes or through the steam room, that you guys can all find people that are quick to get out of losers rather than quick to trumpet their winners. Mm-hmm. Right. The character issue, the thing that you should be working on is making sure that your self-esteem is not damaged from taking a loss.
Not taking it personally.
Yeah, not taking it personally. And then the quickest way to do that is make it a small loss, right? Just don't. And if something's going bad, just, as I say, right, put a Post-it note on your screen that just says, don't make it worse. All right. Just don't make it worse. Right. Start there. Just right. If you need a simple piece of advice, just put it on your screen. Don't make it worse. And then, choose curiosity. And that may get you to flip your opinion faster. And that's helpful, I think.
So when you were on the floor, you had to have seen a lot of different hangups that people had. Like what were some of the ceilings that you saw people hitting their heads against that they like struggled to break through?
On the floor, you had to be physically tall, loud, aggressive, because it was an outdoor sort of kill or be killed environment. So if you were small, you had to jump up and down. Each individual had their own their own strengths. There were people, there were different backgrounds. It's, what I would say, there was sort of a sense of humor and a sense of recklessness combined in sort of an equal fashion. Those guys were really good.
Yeah.
The ability to just be like, oh, well, and still be engaging as though, this is their shot. Mm-hmm. And so, take your shot and have a sense of humor about it, just led to longevity. The people that were wrapped really tight, the people that were reckless, the people that averaged down, all the cliches, right? I'm sure all of you have read all the rules, right? Don't average down. Don't let a winner become a loser. Always trade with a stop. Don't fight with the market. Admit you're wrong quickly, right? All the rules mean, they're there for a reason. Just like, don't go in front of a black cat. Be careful of Friday the 13th. Read your horoscope, I guess. I don't know. So
one of the things that you said that we were talking about prior the other day was that people who couldn't see the perspective of the other side of the trade.
Yeah, it's really critical. Like when you're trading, you're not only are you assessing the probability of the trade in terms of reality. It's not a hope thing. It's not this voice is telling me. It's not magical thinking. It's not a confirmation bias belief. But you have to assess the probability of the trade working, and part of that assessment is the understanding that you can completely understand the logic of the trade from the other side, from your opponent's position, and you can not only see why he's so convinced, but you can see the flaw in his thinking. Mm-hmm. Until you have that process nailed, don't ever add to a loser.
And that's something that you saw a lot of people struggle with on the floor, who kind of couldn't break through to that next level. They could only see things from their own perspective, essentially.
Yeah, or they're, the idea is too, is as we move through different time frames, like the ability to see that the trade's working in a 3-minute perspective. Now it has the potential to swing more of the 15-minute traders into your camp. And then as the 15-minute and the 3-minute and the 15-minute camp are having success, it's going to move the 60-minute camp into your perspective, and then eventually the daily, right? It's like you need, in the old days, if the pit itself wasn't growing traders, the product died. And so that's a good sort of metaphor analogy for the understanding, is that as the trade is moving forward through time, that it's drawing more people into the position that you have. Does it make sense? And then at a certain point, you have to understand that prudence dictates exiting a winning position, right? As the trade continues through time, more people get involved. Then the percentage of the retracement increase, the probability percentage of a retracement increases because there are more participants in the trade.
Mm.
So the idea is that you're first, like I said, you're assessing the probabilities, you're understanding your opponent's position and their flaws, and as it works, are the other time frames following you in? It's as though the wave, if you were surfing, the wave is continuing to build, and as it starts to break, you know that the ride is going to end soon. So it's just a question of at what point you peel off the backside, you bail. And so that's just the kind of a progression that you need to have in the back of your mind. From a mental perspective, are more people joining the party?
Mm.
And is that vulnerable flaw that you saw in the opposition's mentality, strategy, is it still there? And then you also have to measure how many people are wrong, or in other words, or how many people are right. If there's a lot of people on your side that had the opportunity to get in, then you have to understand that there's going to be a big demand to get out of that trade. So you have to be early if you sense that there's a lot of people with you in that trade.
And so when you're looking at the number of people who are in on the trade, I mean, you're looking at tape, you're looking at volume profile, or you look at what are you open interest like?
Right. If you're selling them and it's spent 20 minutes up there, and it's it's just like a flat top roof, and you're right, but you have to understand that there's more people short given the long flat top roof than it is just a spike that immediately is reversed and down. Right. So the understanding is that you saw that today, right? The spike at the highs today there was just one quick spike, and then they dropped 14 handles in 4 minutes. So the idea is that just so understand that how many people are with you. That's the point, right? How many people are with you? If there's nobody with you, the trade's got more legs. If a lot of people have had a chance to get the trade on, you're going to have to prudently decide that you're probably going to have to get out early and maybe risk leaving some on the table, but understand that if those people all go to cover, that trade's not going to work anymore. So right. Just something to be aware of.
Yeah. Another line that you dropped when we were doing prep was trading's like playing chess with a psychopath.
Yeah, I mean, essentially the market's using your emotions as like, if they're trying to, it's like a computer or like a hacker trying to break into your computer system and just cause damage. And the machines, there's no cost for the machines to make things disruptive from a psychological perspective, and probably it's to their advantage. So you have to understand that the markets are behaving and driven by all the money that's allocated to AI, and certainly to front running and to all those sort of high frequency programs. Those programs all are at an advantage when they're creating chaos. So there's greater benefit for them to create chaos. And from our perspective, assuming that things are supposed to be logical, which is a subjective mistake, you have to understand that what we would consider reality testing normal behavior is not going to be, how should we say this? The machines will try and make things psychotic to knock us off our game.
Right.
Like down 1,000, up 600, back to back on no real headlines. So the understanding is that you're having to play chess. Like if you're playing chess with somebody who's psychotic, you have no idea what they're going to do. Right. And so the understanding is that you cannot make this, especially now, you cannot make the mistake of thinking that your logic is the vehicle from which to participate. It's like you just have to integrate the fact that there are people with billions of dollars who are completely psychotic, and the machines are
usually the more money they have, the more psychotic
they are. And so right? So it's right. Almost like we're working with people who are psychotic.
Right.
And so that means that they have, they're just trying to create chaos. They have no such thing as as empathy, right? These are all traits that normal human beings have, right? We have the ability to make a secure connection. We have empathy. We're curious, right? And so all those things that are grounded in what we do as successful human beings to move through our social and our careers are being used against us in these markets by machines that are benefiting by creating chaos and psychotic price action.
Yeah, I mean, this notion that I mean, Wall Street Jesus calls it max pain often. Like, Lucci talks about this all the time. Like, market makers will move markets to the point that will cause the maximum amount of pain for the maximum amount of participants, because they know that a participant who's in a state of fear or of distress or some sort of dysregulation is one that they have an advantage over, right? They're going to be able to shake them out of positions that, they don't want them to be in. And so,
Yeah,
I mean,
the cost to them is nothing to do that. And
right.
just a quick note from being in the ring all these years as both a broker and a local, you knew that the market would always go to where the stops are. I mean, in market structure and auction market theory is the markets exist to facilitate transactions, right? If there's no business to be done at a particular price, it's going to go to where the most business is going to be done.
Right.
And so that makes price empty, right? Price only exists to facilitate the transaction. So what you perceive as cheap or expensive is completely not relevant. It's gonna go to where the most business is. So you just make sure that if you're on the wrong side of a trade and you can see that there are stops up there, you know it's going there, right? And if it's finding stops on the way up, it's gonna keep going until they're out of orders. And the understanding too is that once you've exhausted the orders and part of the deck, you can't use retracements as a viable thing because there's no orders left in the deck, which is why you're getting barbell distributions, right? There's only orders above the highs and below the lows. So it's possible that once you've exhausted all the orders to the upside, they're going to get all the orders below the lows, which is what we perceive as crazy behavior, but it's actually the market just going to where there's orders. Because, right? Go ahead.
Well, I was just going to say, I mean, some people are saying in the chat that this is like light bulb moment for them. It's really resonating a lot. I mean, if this is making sense to you guys, even if you don't have questions, just say that in the chat, because what Chris is talking about is like pretty high level. And it's important. So, if you guys if you're picking up on this, just let us know. And if not, Chris can go more in depth.
Don't use intraday retracements because there's no orders left in the deck, right? When they run up, they've exhausted all those orders. So the only place that there's orders, if the market makes a new high and fails, then it's going to have to go a long way down. It's probably going to have to go to some sort of VWAP, or if it fails there, it's going to have to go to make new lows, because we've exhausted all. There's no resting orders in the deck once you've moved through the range.
Yeah. I mean, and what John just asked, Chris is talking about broadening formations here, right? Is that what you're talking about?
Sure. Or just, if you're caught and if you're caught in something, the only way that a market stops is that it stops from a lack of activity. And you see that in the tops now. It's not like there's one giant force and another giant force that come together, right? It's just that one side of the trade is exhausted. Okay, one side of the trade is exhausted, and then it just slowly rolls over. And you see that in the tops that we've been having. It just slowly rolls over, and then it starts to pick up speed. So just understanding right now that if you're looking for a turn, it's an exhaustive element. It's not two gigantic cataclysmic forces that are coming together. And then, go ahead.
I was just gonna say, we just had our second epiphany in the webinar. So if we can get to 5 by the end of the webinar, then this will have been a success, Chris.
The idea is that if you're going to fade something here, you because in other words, they're inciting chaos. There's no boundaries. If you're going to fade something, trade small and give it a lot of rope and give it a lot of time, right? Because when we tend to be as traders, we always tend to be early because we're sensitive and we're paying attention. And so the idea is that just, like I'm saying, you have to give it rope and you have to give it time if you're fading a move.
So with regard to how this ties back into each individual's personal psychology, right? I mean, this notion of max pain, do you get do you use your own emotions as a barometer for where, these sort of the smart money might be trying to push things, and then use that to feed into your logic for what position you're going to take? Do you sit there and say, I'm feeling a lot of fear right now, that's something for me to pay attention to,
Yeah,
or
I mean,
how does that factor in?
yeah, I mean, we are emotional people, and there is the unconscious and conscious dialogue that happens, and that you can't help but being emotionally invested. I mean, you understand time's going by, you're putting in effort, people are depending on you, you have your own self-esteem issues in respect to how well you do your job. There's all sorts of fear and anxiety about just surviving. And like we're saying, in the pandemic, right, there's got to be so many people who are walking that emotional tightrope of mental health that are now getting pushed off to either side. So we have to assume that there's going to be greater amounts of people that are suffering from mental illness, and that is going to be pushed into the behavior of prices and the behavior of people out there in the world. Just, it's outside of your control. In my case, I'm just, it's just like you cope as best you can, right? It's like, you call your friends, you talk about it, you just make sure that you're emotionally regulated, right? If you see that you're dysregulated, back the fuck up, right? Keep your hand off the mouse and just police yourself from an emotional regulation place. And then if you feel as though you're strong and you're emotionally regulated, you have some structure that you can trade, right? You're not, if you're trading emotional, then you're, it's like people who roll the dice, people who just say, I'm going to roll the dice, or sometimes you just got to roll the dice. Those people are weak. They have no staying power, right? So you make sure that you have a structure, no matter how you're using structure, and you have a structure to lean against, and then you make sure you're emotionally regulated, and then you understand the probabilities of both sides, your side and the other side of the trade. And that may give you some, and then, get a lot of rest. Try not to drink too heavily, right? Make sure that you're not fighting at home. Make sure that everything you got, that's, tie up every loose end that you have in your life. Make sure your apartment's clean or something, and make sure the cat is fed or the dog is walked. Right?
Yeah.
Just make sure that there's nothing that's distracting you. There should be nothing that's distracting you, so that you have the ability to survive this, because they're going to punish the people who can.
Yeah, I mean, this is something that Chris and I, when we teach some of the sections of the master course on trading psychology, we go deep into this. And one of the things that truly separates, traders who can make it and traders who can't is, the ability to emotionally regulate yourself, right?
Keep your
And
emotions in check, right? Keep your emotions in check.
yes. Yeah, it's vital. And, the market is there. As Chris just said, the market is there. It is a beast built to prey on your emotions.
Yeah, it will consume you, right? The market will consume you if you give it a chance, right? So
and the longevity that's required in this game is too long. You might be able to white knuckle yourself, white knuckle it for a week and make it through, but Chris has been doing this for 40 years. Like you just can't fake that. You gotta be able to regulate.
And my friends who are my friends who are too big too early in the move, who have been doing it for 50 years, still get stopped at the highs all the time because they're too early, right? So it's, the idea is if you're relying on your emotional strength, the market will break you. So you have to rely on something besides your emotional strength.
Yeah, and also recognize the fact that one of the best things that trading is hard enough, leverage the things that it gives to you, right? And one of the things that trading gives to you that other arenas of competition do not is that you can choose when you want to be in the arena. You can always say, today's not the day, I'm stepping away, I'm not going to do it. If you're a trial lawyer, like, you have to show up and do that. If you're an NFL player, the game's on Sunday, it doesn't matter how you feel or what's going on, you have to play the game. With trading, that's one of the few arenas of competition where that's not the case. You can step away if you want to. So you have to use that to your advantage if you can.
Someone in the chat, I just saw it go by, said you could fade your emotions. That's brilliant. Whoever said
that's Tim. Yeah.
Yeah, Tim, I will buy you a beer if you're ever in New York. That's genius, right? Like, that's really great to be able to have the ability that's like the perspective of being like, oh, I'm flipped out. You can almost create a trading strategy that is when you're flipped out, only trade. Wait till you're flipped out.
Yeah, the opposite, the Seinfeld episode where George does the opposite of all of his instincts, and his life just unfolds in front of him like it's just perfect. He's like dating this smoke show woman, and he gets a job with the Yankees and stuff. Like, do the opposite of your emotions.
That's basically,
Yeah,
what that's basically saying is that logic is subjective, right? The understanding that what you think makes sense, right, is that's a hook, right? Is
yes,
depending on, right? That we're laughing about it, right? The sense of humor is great, but
right,
the understanding is the the take it to the bank number is that logic. You need to release yourself from logic, right?
yes.
Release yourself from logic, right? And recognize it's subjective.
So let's, I mean, in terms of like, you're talking to someone, let's say they've been trading for 2 years. They know, that they're committed enough to this that they really want to do this, but they're still really kind of finding their way. I mean, what would you suggest to people to give to help them arrive at this place of sort of plasticity of openness? Like how can they try and cultivate what you're talking about?
The understanding of structure and process, the understanding of structure and process, where you're like, okay, the market goes from vertical to horizontal and back to vertical. And so understanding where you are in that process, understanding the way that markets move, just the nature, right, that we saw in the ring. If something like, you think something's cheap, well, you buy it, then you better have about 5 million people behind you who agree with you. The understanding is that if it's a low, it's not going to stay there. If it's a high, it's not going to stay there, right? The market's looking to close off a direction. So it's looking to remove uncertainty. And so you can do that by the amount of time it spends at a particular price. So that if you think it's a low, then the market should move away there very quickly. And you see that happen now all the time. And the same with today's high. I mean, it's been about a millisecond on today's high and dropped 14 handles. So the understanding there is that that if the price is too low, it's going to move away. If the price is too high, it's going to move away fast. The corollary, the unspoken corollary to that is if you get a second chance at something, you don't want it, because then it's not really the low or it's not really the high. And a third funny aspect is that we would always say if we sold the high, it's not going to be the high. And that's proven true over like 30 years. So that if you get lucky and sell the high and it goes 10 handles your way, cover, because I have never had it happen. And I've sold plenty of highs and I've never had it be the ultimate high or bought the ultimate low. So, and implicit in that is that don't have a party when you have a winning trade on, right? Catch yourself. If you're having you're having a little party for yourself, then that's an issue. Right. So again, we're trying to regulate our emotions in regards to, making sure that you're not getting traumatized on big losers and you're not enjoying sort of a hyper sort of magical thinking about how great of a trader you are when you're winning. So that, again, we're reality testing and we're understanding that 8 out of 10 traders lose everything. Right. So that should, kind of, back it up a bit, right? It's we have a lot of skills to develop and the machines are right there trying to make our jobs worse, make our lives harder by creating chaos. It's so strange to watch what we used as humans in regards to social interactions be used against us in the trading world.
By other humans creating a
By
machine. Yeah.
our machine, right? Don't
Yeah.
take it as a personal affront.
Right.
Don't personalize the behavior of the market in regards to what you think is right. Just try and keep those two separate.
One of the other things when we were prepping for this was you said the people who need to know why. That's a ceiling that is very limiting for people.
Two economics professors from NYU would come down to the ring in the summer, and every summer they'd get blown out. Every summer, economic professors at NYU,
Yeah.
and trade in the ring, and so it was their summer vacation, and they would
Yeah.
get destroyed every summer. So, I mean, doctors take note. The economists are worse traders than doctors.
Which is saying something, because I know some really shitty traders who are doctors. Some
Yeah,
doctors who are really shitty traders. Yeah.
yeah. I mean, that was an old thing on the floor, right? That doctors were horrible traders because they
Right.
never have to admit they're wrong, right? They're always the experts on everything.
Right. Right. And so this pursuit of knowing why something happened, you're saying is that's just, you're never really going to know. You can't know. You can't be obsessed with that. You got to let it go and go with the flow.
Well, here, let's just make it the mechanics of the situation. If you're worried about why you're late, right? Where? So instead of why, let's just work on where, right? And just be like, where is it going, right? Where is it? Is it going to go up? If it's not going up, what did Woz used to say? He says, if it's not doing what you think it's going to do, it's going to do the opposite, right? So the understanding is that we're driven, since there's only two outcomes, up or down, we're driven by the understanding that what difference does why make, right? If the end goal is to increase the amount of money in our bank account, be able to pay the rent, all the other, raise a family, the understanding is that let's get the job done. Get the job done is where is it going? So your job, where is it going? Not why. Why is self-indulgent?
Right. I mean, I'm sure you guys have a lot of questions on this, so let's and I see a couple of them getting piled up in the Q&A portion of the chat, so please keep doing that. I'm going to take a moment here to give a quick where's my I'm not going to do that yet. We'll do a quick promotion of the master course to let you guys know a couple things that we've changed since our last webinar. So we have a new payment plan option for you guys for the master course. And essentially what we've done is we've just said you can either do it's a one-time purchase, which is $3,000, or you can do a payment plan, in which case you do a down payment of $1,000 and then you break up the rest of it across 6 payments. So, we know that right now, obviously for a lot of people, financial situation has been completely thrown into chaos, and we appreciate that. We respect that. So this payment plan option is a way to sort of spread it out over a longer period of time. By the way, if you guys want to check out more information on the master course, understand what we offer, everything that it entails, you can go to www.sayingwhatyoudocom/MC, and that'll redirect you straight to here to the 3LT playbook page, which has all that information. So www.sayingwhatyoudocom/MC, or you can go to just sayingwhatyoudocom, navigate to the education section, go to the training, the master course, you'll find it. We are going to offer a discount right now. So everyone who's a member of our Steam Room gets $500 off the master course no matter what. So that gets taken off the final purchase price that you'll pay. We're going to offer that same discount of $500 off to the next 10 people who sign up, regardless of whether they're Steam Room members or not. So if you guys are considering doing this, considering joining us for the next master course that starts on November 16th, highly suggest you grab that spot right now. There's no reason to wait. You can save yourself $500, and you get to learn from Lucci, of course, from Ranchero, from Wall Street Jesus, and obviously from Chris here on the trading psychology front. We're also going to have Chris teach a little bit more about his market structure, market profile, his methodology, which is a little bit outside of trading psychology, but he's got a lot to offer there. So we'll be doing that as well. So yeah, November 16th, next one starts. It's incredibly in-depth education. I'm not going to go through all of it right now, but you guys can go check out the page, shoot us an email, contact@sayingwhatyoudocom if you have any more questions on that. And with that aside, let's answer some questions.
How about just you guys, market structure is really important. Remember structure and process, right? And the integration of structure and process. And you can see in the market when you have, for example, on the Microsoft earnings the other morning, or on the close, right? The structure and the process had been down. And then Microsoft came with really good earnings, and the stock was up $4, and the market it reopened down 13 handles. And then all of a sudden, that was a perfect place where both the process and the structure were going bad. Okay, you had good news that had come out from Microsoft, and then the process was down, and the structure, which had been down, was now continuing down. Those are the kind of situations that you can see that there's outsized reactions where you can get on board and know that the so to speak, you have both horses pulling in the same direction. So it's important to make sure that you grasp in your mind the concept of both structure, the underlying structure, and the process. And implicit in that is the psychology that when somebody's needs who aren't getting met, those people are more predictable. If you have 1 million shares of IBM and it starts to go bad, we know you got to go. If you only have 100 shares and you're up $4 on it, you're at PJ Clark's having your third margarita or something like that, right? So those people who are getting what they want are much harder to predict than the people who aren't getting what they want. And so by grasping the understanding of both structure and process with those sort of psychological tells, just the nature of the way people have to behave around money will help you with your trading.
Well said. I realized I forgot to say the coupon code for the $500 off. So it's SLMC 500 off. You guys will be prompted for a coupon code when you go through checkout on the Master Course page. SLMC, M as in Mary, 500 off. Chris, so if you could go back in time and pick any other career path, would you? And also, was there ever a significant point in your trading where you realized this is what I want to do?
No, I never went to college. I would have gone to college because that kept me out of the pedigree places like Goldman. I ended up working for Goldman for a while, but no, I mean, as a kid, I was young and I was on the floor of the exchange. I was 20 with a membership and my boss was the chairman of the New York Stock Exchange. And so I was on the floor of the exchange with a membership. And they said they'll pay for me to go to college, but they said you should stay here and learn from us. We're smarter than what they teach in school. And so I do think that's, and I think in the case of the Lucci course here, I mean, these guys are real. They post up their results, both good and bad. So I do think that there's not many people in the industry. Anyway, would I change? No. Will I stop? No. Would I have done something else? No, it was the best opportunity I ever had. I was never presented with a better opportunity. Do I think it's valid going forward? Yes, because in the future, given interest rates will be zero forever, every dollar ever printed will have to be traded. So it's a skill you got to know, because otherwise, what else is, essentially the trading is going to be the only job. That and maybe a mental health professional will be about the only jobs left, because everything, they can't automate. A human can optimize faster than a box. So, and from the trading perspective, they won't get rid of us, and interest rates are going to be zero. So there's going to be incredible demand for anybody with the skill who can do this.
Well said. Ivan asked a question earlier, what do you do if you're distracted at times? Like, what if you do if you're trading?
Yeah, go on vacation. Right?
I mean, because you're saying that
you have to.
That distraction is a sign of burnout or what?
I don't know. If you go on a date and the girl's distracted, it's like, no, this is not working. And same thing with the market, right? The market is your date. Like if you're not into the date, you're done. Right.
Got you.
Right. You just have to be, you can lose yourself in the concentration. If you're distracted, that means that you have other unfinished business somewhere else. Clean it up. It's like in meditation, right? If you're not fully focused on what the task is at hand, your brain's going to wander. And so a wandering brain is like the people who say that they're going to roll the dice, right? There's nothing there. You can, they're like a hologram. So the understanding is that you need to make sure that unconsciously you're not disrupting your conscious perception of what's happening. If there's the ability for to subconsciously punish yourself, and that's another story for another day. But if you're distracted, it's the potential for you to subconsciously punish yourself in the conscious understanding of watching the price, the tape, the rules in regards to trading. You got to make sure that you have the ability, you're firing on all cylinders. And if you're distracted, you're just setting yourself up for a frustration, and then depression, and then, trauma, and then the recovery from that is a bummer.
Said.
Sorry.
No, I'm responding to a question somebody asked about the number of classes in the master course. They asked, it says 12 live classes, evening classes, 4 live tape reading sessions. Does that mean 12 classes or 16 classes. It's 16, and those are kind of the core classes. There's also, you get Rancheros Trading the Post classes, which is an extra 2, and then you get the trading psychology classes with Chris and I, which is an extra 2, and then we're actually going to have Wall Street Jesus teach a couple. So we're looking at more like 24 classes. It's fucking comprehensive. Let's just say that we've built this thing into a beast.
Yeah, and then certainly, you can email me or call me, and I'm sure all the other guys are the same way, right? The goal is that improving people's lives to be able to survive on their own is a really good thing to do, not only from your perspective, but from a teacher's perspective too. So it's like we're invested in the outcome of making sure that you take away something that makes your life better. And I mean, as cheesy as it sounds, most teachers are like, we're invested in you. And, the idea is no, you have to perform. You got to do this. You got to put in the work. You have to take the risk. You really have to, reinvent yourself to a more evolved level. You have the ability to do it. Time's going by. I'm not pitching it. I'm just saying you can do this if you put your mind to it.
Yeah, I will say that our sort of general philosophy is that if you're looking to any of us for handouts, you've come to the wrong place. We definitely don't, reward the mentality of just sort of like asking whatever the first question that comes to mind and getting someone to give you the answer for it. But if you're there, if you're putting in the work, if you are taking it seriously, you are not going to find an end to the amount of patience and the willingness of our team to help you out, because we've been doing this for a long time, and we're extremely appreciative of people who take this seriously and invest themselves in it. It makes our job,
there's no crying in commodities, right? There's no that is what they said when you first came on the floor. There's no crying in commodities, and you have to keep up. It's not a stagnant profession.
Yeah, you got to be ready to be fucking challenged.
Right, you're on the front line, and so that's why we're talking about making sure that you have your emotional house in order before you even, what does it take, the red pill?
Yeah. A question from Gerardo, how can we approach decoupling P&L from your success?
You can't. You can trade smaller till you get confident. And Dave Stone would say this a lot. He was a big trader on the floor, huge. And I'd say, what do you do when you get cold? And he'd say, I trade more, but I trade smaller. It's our report card. It's the reality. It's like you have to be cognizant of that. The numbers themselves are not as important as the direction. So if you're getting big swings, then maybe you want to back off, but you can't decouple. And at least in my case, I cannot decouple. I feel bad when I lose, and I try not to celebrate when I win. But over time, what happens over time is like, if you were a new business and you walked into the bank and you asked for a loan, the bank would be like, go fuck yourself, because you don't have a track record. But as you have more of a track record, you start to take your losses with a bigger grain of, more sort of a plum. You're like, oh, I've had 43 winning days and 2 losing days. So you start to take, you're like, okay, well, I'm sure the ratio there is good enough for me to survive. So you end up becoming desensitized to your losses. But when you show up for work, it's not like you expected to lose money. So the business is skewed more towards expecting to win and not expecting to lose. So the losses are disproportionately harder than the wins are celebratory.
Hey guys, I think it's pretty fucking important to pause and take a moment and reflect on the fact that, Chris, you've been trading for what, 40 years, right? How many years have you been meditating? How many month-long meditation retreats have you been on? Silent meditation retreats.
1, 2, 3, 4. I've done four full months of silence, and I've done 12 to 20 2-weekers.
Okay, so keep that perspective in mind, like that sort of history. And he just said, I get upset when I lose money. I get bummed when I lose money, and I try not to celebrate too much when I make money. But no one. I think that there's this myth out there that new traders get caught up in of like, I have to just like sever my emotions on them. And at some point I'm going to reach this like state of being completely dislocated from your emotions. That's the vast majority of people. That's just never going to happen. But what you're trying to do, we were talking about that emotional regulation piece, is you're trying to just reduce the amount of volatility, reduce the severity of those ups and downs and those swings. So like, yeah, you're still going to be upset when you have a shitty day. But the severity of that dysregulation is going to be way, way, way less. And that means you're gonna be able to bounce back faster. You're gonna be able to think more clearly through it. You're not gonna dig yourself into an emotional hole on top of the financial one.
Right. We want to be determined by ourselves, not by what other people think. So the understanding is if there's voices in your head that are from people in your life, you need to kind of try and eradicate those little voices that are saying, oh, you should have done that, or should have done that. This is some other, ex-girlfriend, ex-boyfriend, ex-wife, mothers, right? You want to try and fight those voices back as much as you can, so that you're distilled into yourself. The self, you're not trying to get rid of yourself, right? The self is what you're leaning against, but it's a strong self that's not affected by those voices. That's self-aware and self-accepting, and without getting too deep, right?
And that is something that we go deep into in the master course, is helping you guys understand what are the belief systems that you have coming in about yourself, about success, about money. What did your parents tell you growing up that could be influencing your decisions when you sit down in the market? I mean, there are people who had messages bombarded in their heads from early days of this is what success looks like, and they're carrying that into the markets, and they are shooting themselves in the foot every single day. So generating self-awareness around your own belief systems is a huge part of this.
Right. The understanding of just being aware, right? Of being aware of your tendencies, like, do I punish myself after a losing day, right? Some people, the Irish guys would beat the fuck out of themselves.
I'm Irish.
Yeah.
I know it.
And the Jewish guys would just be right on to the next trade. And so,
your culture's important, man. Your culture's huge. And, that's one of the reasons why we have the benefit of having a very sort of multicultural team, within our organization, with our company. People come from a lot of different backgrounds, and it's fascinating to see that. Just
we laugh about it, but it is something that maybe it flips a switch for somebody out there, right? And it's
totally.
It's only real to bring it to your awareness that this has occurred in the past. It's not a predisposed or any sort of politically incorrect statement. Just to kind of wake up to the idea that there are many aspects to your behavior under stress that you need to be aware of. Okay. And then when you are aware of those, and you can accept those within yourself and then work around them, or even eventually change them.
Yeah. And Modu said, something, peace of mind is earned piece by piece. I mean, that's very, very well said, and very true in my experience.
Whatever, I saw something to go by about the Italians getting angry. It was great. Us
Italians cuss and yell at the trade, then move on to the next. I mean, if you can purge it and process it, then sounds good to me.
So learning with it some sort of upbeat and a sense of humor, it facilitates curiosity, right? Coming from a traumatized, anxious background, a dismissive and an avoidant attachment style is really tough to get through. So, just trying to figure out, how do you attach to things, right? Are you attaching to the market from a secure place? Or are you attaching to it from a dismissive or avoidant fashion?
Yeah.
Because you're, in a sense, having a relationship with this price. So how you attach to things is critical. And then from there, you can start to become aware and then accepting that.
Yeah, we're gonna go deeper into that stuff. I'm excited for this master course. That we're gonna go deeper into that stuff. All right, we'll do let's say 2 more questions, and then Chris, we probably gotta let you run. So
anybody, you guys can find me on Twitter.
Yeah, Chris is on Twitter too. Chris,
Chris C. Cady.
Yeah, Chris_C_Cady. That's Chris on Twitter. All right. What would you say is the most valuable lesson you've learned while trading, like generally for new, if you were going to talk to a new or younger trader, what's the most valuable lesson that you've learned?
Victor Sprandia would always say there are days where they give out money. They hand out $1,000 bills, and they're, you want to be there for those days. And so the idea is that the implicit in that is that you have to stay in business, right? So that's the first thing, right? So you were going to stay in business, right? Structure your life so that you're not having to push yourself out on the risk parameter to make your overhead, right? Make sure that you're not forcing yourself into a learning curve that requires that you take risk more than if you were to make your life more affordable.
Well said. Yeah, we had a mentor when we were working out in New York in the New York offices, and he always said, "Your job as a trader is keep your seat at the table.
Yeah.
That is number one responsibility. And if you fuck that up, then you fucked up the whole game."
Because
So
there are days where they hand it out. There are days I've seen it. They just give out money. It's unbelievable.
You're like a kid in the candy store, right?
Free money.
I love it. All right, let's see what else we got. This is probably going to go deep, but Chris, do you trade with the market profile, candles, both? How do you?
Yeah, it's like there we were skiers, and then snowboarding showed up, right? And everyone was like, what about this snowboarding thing? And someone once said, there's two languages being spoken here. You should be fluent in both. And then there's other people, who would say, you can't fix a car with a hammer. Right? It's, tools in a toolkit, right? All metaphors to say that you need to have knowledge. You need to have working knowledge of what most everything is. And that includes AI, that includes auction market theory, that includes tape, that includes psychology, right? You need all these tools before you can throw away the tools that you don't think work or not applicable, right? As things move beyond certain ways of trading, then other tools become not, like a fib retracement intraday is worthless, in my opinion, because the latter gives the illusion of resting orders, but those aren't resting orders. Those are just market makers in there. There's no real, if you had big size, you just push right through the range. There's no standing orders in there. So what do I use? I use VWAPs. I use volume profile. I use CapFlow software, which is a market profile software from Pete Stottlemyre and Steve Hawkins in Chicago. On short-term basis, I use 5-minute profiles. Combining those profiles is, how you segment data is really critical. So if you feel the move started at 11 o'clock, you start the profile at 11 o'clock and then collect the data from there. And then you stack it against the other participants who had the positions the other way. So the key really is how you segment data, right? And so where is it meaningful? Where is it not? Let's see. Volume profile, I don't use much in the way of moving averages. Many people use RSI and stochastics together to judge overbought and oversold. Implicit in overbought and oversold is that crashes or melt-ups occur from overbought and oversold. So it will work. It's like selling wings, right? It works until it doesn't. So just, if you're using overbought or oversold, make sure that your risk is defined, because if it goes bad, right? In a crash always occurs from oversold conditions, right? All the prudent shorts have covered. What does that leave? That leaves the value players. What if someone needs to liquidate? Well, the value players are the only people there. And now if they bought it at 7, it's now 6, it's now 5, it's now 4, right? There's, everybody's got to go. So, every tool has its Achilles heel, as long as you understand where that is and what it's good for, and then the situation that you're in, then yeah. But yeah, you need to understand. Sorry for the long-winded answer. You should learn them all and then discard what you can, as many as you can.
Well said. Yeah, I mean, and that's a lot of what we teach is, we're going to teach you the fundamentals of how the markets work. We're going to teach you tape. We're going to teach you flow. We're going to teach you how options work and everything like that. And then a number of different sort of techniques and strategies, within that realm. And the people who are successful, many of them coming out of the master course, are the ones who say, all right, this, and this is what really works for me. This thing, this is a square peg in a round hole situation. I'm not going to force myself into that. So it's really about a process of learning the skill sets, learning how this stuff works, and then finding, all right, this is what works for me. Yeah.
And the probabilities, right? Like only 10% of breakouts actually work. So you have to assume that 85% of the time it's going to revert. 90% of the time it's going to revert back to where it started. So even, learning and understanding that the percentages over time for a particular type of move or behavior to follow through is critical when assessing the probability when your money's at risk. Right, that's something that, remember, only 10%. So you would think that 8 out of 10 times you're going to trade a reversion strategy, it's going to work. So, why not do that? Well, the one time that 1 out of 8 times that the breakout strategy, those guys make 8 times what we make in the reversion strategy, or hence you could lose 8 times, right? So understanding the market cycling between reversion and then breaking out, and it's a cycle. So you can predict, or at least you can assign a probability to the fact that the breakout may continue, predicated on how long it's been going sideways and how long it's been reverting.
Yeah, and Chris could talk about this stuff for a while, and he does do that in the master course. I mentioned this this deal that we have. We're giving away 10 spots at the $500 discount, and a couple of those have already gone like in the last couple of minutes. So certainly encourage you guys, if you're interested, go to stlucci.com/MC, use coupon code SLMC 500 off at checkout, because those spots I think are going to get filled up.
People will walk away from you at a cocktail party if you start talking markets to them. So
unless they're salivating traders, and then they're like, yes, I found the one guy at this party who I want to talk to.
Just don't talk politics or trading at cocktail parties.
Thank you guys for being here with us. Chris, thank you for doing this, for sharing your wealth of knowledge. If you guys want to find Chris on Twitter, Chris_C_Cady. He should be pretty responsive to you guys if you shoot him a DM or something. And we'll see you guys after the election, a week from today. We're going to be on here with Wall Street Jesus.
Right. Be careful, people. Be careful.
Yeah. Be careful. Keep your sane heads on your shoulders, and don't do anything crazy no matter what happens. So
let it pass by. Let it pass by.
Yeah, we'll see you guys next week. Thanks for being here.